Hey traders, welcome back to another Sunday video where we prep for the week ahead. And in this video, we'll be taking a look at the commitment of traders data that we've got, which looked very interesting, by the way. We're going to be looking at what's coming this week and what could impact your trading account. And finally, we'll talk about top setups that I'm looking at going into the week. Let's go ahead and jump in. And before we get too far in the video, let me just remind you that today is the very last day of our flash sale event going on for the Edge Finder. We are planning to restructure and reprice our software. So if you've been watching the videos for a while and you want a copy of the tool, please let this be your fair warning. We are planning to restructure pricing, and currently you can get 40% off with code YTVIP. The link is down below in the description. This is a massive discount that we are doing as sort of a fair chance for people who have been thinking about getting a copy to pick it up before the prices change. So there's your fair warning. Now let's jump into the video. So first of all, we can take a look just around the room here. We had the S&P 500 fly high last week, even with the NFP jobs number initially taking it down. We still saw a really strong rebound. Same thing for the NASDAQ and the Dow even as well. All three indices there on the stock market side saw real strong moves. Speaking of indices, we also saw the dollar index fly high on Friday, and we'll get more into that and what happened there and what it could mean for this week in just a moment. The euro dollar tumbled hard off of the same news. Pound dollar, same idea. You guys know what I'm talking about. That was NFP. And NFP also took gold out here, though we saw a little bit of a rebound towards the end of the week. I have my ideas on this, and we'll discuss that in just a moment. And then finally, oil took a absolute bath this past week, really tumbled hard. So we'll get into that one as well. And before we get too far into the fundamentals, let's talk a little bit about the technicals here that we saw on the dollar index. We've been range bound on this market right around the 103.7 level in red here, which has been holding price back from making any substantial gains to the upside. And same thing can be said for the downside. Bulls have been really strong at around 103.1. And so again, right around this area here, we've just seen the bullish structure hold very well, and a couple periodic times where we actually went back and retested the previous range. But this previous range tells an interesting story. The last time we finally broke out of that range, we proceeded to go on a nice little run there. And actually, it ended up being about the same distance or slightly more distance than the range itself. So with that idea in mind, so again, let's show this. So the range was this, right? We then proceeded to move just slightly more than that in the next run. So I want to take that into consideration here. If we are actually seeing a breakout on the dollar, look at this. The range is just about the same, and perhaps a conservative distance of move to the upside that we could see could be up to like 104.3. So interesting little idea. Again, we've been range bound here. So I'm saying if we make the same expansion move that we did previously, or just slightly more even, we could see a move up to the 104s pretty convincingly. So something to think about there. Will we see a pullback before then? Possibly. If we do see kind of that break and retest of this area, that could be interesting. That 103.7 I would expect to hold as support now. It had been resistance for quite some time. I would say we finally broke decisively above that on Friday, with the catalyst being NFP and a big move there overall. I mentioned the indices. I thought they were really interesting on Friday. So again, jobs data came out, and initially it sold the indices off, and I was actually really excited because I'm bullish on these things, but I've been waiting for a pullback, and unfortunately we got left behind again. Price shot up to the upside. I still think I'll get my chance to get in on the entries again on the indices. But for now, just playing the patient game. We saw a little bit of a sell-off towards the end of the day, and also we can see that in the NASDAQ and Dow, we also kind of tagged up against the upper levels of resistance. The NASDAQ kind of failing to clear the highs in recent moves. Now, what has caused these things to be so bullish all of a sudden? Well, it was the earnings from companies like Meta, which were amazing. Amazon, same thing. A little lackluster from Apple, but again, the market took these two and just ran with it. I don't know if you guys saw, but Meta was up 20+% on Friday in a single day. It added 200 billion with a B, guys. It added 200 billion in market cap in a single day. That is larger than like tons and tons of companies combined in a single day's gain. Just for fun, we'll show Meta because it was such a monster move. Look at this. So we ended up 20% on the day, which is just a remarkable gain for a company. And I gotta say, I put this on my Instagram, but it was a little painful to watch because I used to own Meta. I bought it in the lows of the 2022 sell-off. I really picked up a position down in this area and rode it for most of its way up and then ended up selling out of it. So, of course, I can't complain. I made good money on buying Meta and holding it, but definitely feels a little bit bad to miss that move. That's a crazy, crazy push to the upside. So if you're someone like me who is wanting to get in on the indices at some point, here's my thought process on this. We've had just a monster move, and markets don't move in one direction forever. They can for some sustained period of time, but you do usually get some form of a pullback. And my thought process is we just recently broke through the all-time highs, right? So I think it's possibly reasonable that we could see a kind of pullback to that level at some point here. So that 4,800 on the S&P 500 is a level that I'm interested in. It seems to come along with some nice level of support, and I'll be watching that personally for a pullback if we can get it. If we don't, I might end up buying sooner than that, big pullback. But I do like the outlook for the S&P 500, and I'm just waiting for a healthy correction in the meantime. So I mentioned the labor market, and we saw NFP add 333,000 jobs in the month of January, which was an absolute blockbuster month. We saw an amazing bounce back in the jobs world, and we have to ask ourselves, what does this mean for markets? Is this good or is this bad? If you're, a stock market bull or bear, or you're looking at the dollar, what does this tell you? Well, I think what this tells you is that in terms of the US dollar, this is bullish, right? That's just straight up a strong labor market. That's a strong base of an economy. So the US dollar looks pretty good in my view from that. But what about stocks? Well, this is sort of a more mixed picture, because if you're talking about stocks, there's all sorts of different areas of the market that you could break out. Big tech, I think, is not actually as negatively impacted. That's why we saw, on those good earnings and, this labor market news didn't really even phase things like the NASDAQ. Where you saw people get more hurt were the more interest rate sensitive places like the Russell, the RTY. You saw basically some divergence in companies. Also the RSP, which is the equal weight S&P 500, performed negative on the day. Meanwhile, the S&P, NASDAQ, they went for a party and they went higher. The Russell and the RSP actually had not great days. So market breadth, as they call it, was a little bit poor on Friday, meaning that, again, a very select few companies took the lion's share of the gains for the day. And so this data is definitely positive for the dollar. I would actually say it's also struggling for the gold market here as well. We also saw wage growth. I'm not sure if we have this chart ready. Let's just see if we get something here. We're currently working on a bunch of labor data. Okay, and we do have wage growth here. So we had 4.5%, and again, that's a year-over-year number here. So what you need to understand about this data here is that this really strong jobs data pushes back the idea of March rate cuts for sure. That has been almost ruled out. I think the last time I checked, there was an 80% chance that in March we are not going to see rate cuts. And this is something we've been calling on the channel. If you've been watching for a while, then you might have heard me rant about this several times. But even when the odds were like a 60% chance we would see a rate cut in March, I was still kind of in the camp of, well, this labor data, this overall economic output that we've been seeing, PMIs, advanced GDP, retail sales, we've seen strong numbers out of the United States. And those numbers are going to be inflationary pressures that keep the Fed from rate cutting. And they actually came out and basically said just that. Jerome Powell said that their base case is not rate cuts in March. And so when we get over to things like gold here, this is going to be, in my view, under pressure in the short term in that environment. Again, jobs data being strong means the dollar's likely to be strong, and a strong dollar puts downward pressure on gold. Now, let me be clear, I think we still get rate cuts this year in the back half towards the end of the year. And if that happens, gold will finally see its day in the sun, I think. And so I am watching bullish overall on gold, but in the short term, I'm kind of neutral to flat. This market has been really range bound. I think there's also some geopolitical tensions that are going on. And if you saw the move just towards the end of the day on Friday, we heard that, we'll get to that in just a second, but we saw some tension in the Middle East flare up, which again brings back the bullish case for gold in the short term. So gold to me is kind of a mixed market and something that I personally am kind of staying away from. However, we can recognize that there is some resistance up ahead and some support below. So we're just choppy, just range bound. This has been a tough market to trade, I think. And here's that news I was talking about. We saw that the US launches strikes in Iraq, Syria, and nearly 40 people were unalived, unfortunately. So yeah, it's some tension over there. And when that happens, of course, that you're going to see some volatility in the gold market as well. Again, big push off of the lows here towards the end of the day. And I think that this is simply just the tension, the geopolitical tension premium that gold sometimes gets. Because when you take a look at other areas against the dollar, it was pretty much a flat out sell all the way to the end of the day. And I want to talk a little about the euro here for a second, because there was something really interesting here that we saw. If we go over to the Edge Finder and I pull up this bank forecast chart, I want to show you this. I thought this was fascinating, and I posted something about this in our Telegram channel, which, by the way, is linked down below in the description. It's totally free to join. But I pointed out, I pulled up the euro dollar here for a second, and check this out. So I selected EU just curiously, and I said, okay, well, here's all of the different banks that we have reporting, right? So we have Citi FX's research team and Commerce Bank analyst team, and all these teams put out their monthly and quarterly targets. And so what I did is on our software, we have an aggregate or a monthly average of all of these outputs. And I looked at this earlier in last week and I said, this is interesting. They think 1.08 is their monthly target for the euro. Well, check this out, guys. Look where we ended up. And again, remember, I mentioned that the target was like 1.8 when we were like looking at it over here. So at that point, I was like, 1.08 is a pretty big drop down to this level, 1.08. And look what happened. On Friday, we saw exactly that happen. We saw a move down to 1.08, which happened to be a level of key support. I thought that was fascinating. So again, forecasts from bank players here, 1.08, and we actually saw the move. It was kind of a fascinating thing. Again, that was a really rapid decline on the NFP report, but I thought that was worth mentioning. And it kind of takes us to where we're at with the euro going into this week. We tagged a level of key support and we just gently broke underneath it. I wouldn't say we cleared this level completely. However, if we do see further selling in this region, if we are able to close underneath this level by a pretty substantial meaning, and one way to quantify that, I like to draw fibs, right? So if we were to see something like this, a move down to 1.075, give or take, that could be kind of our clear that, hey, we are actually starting a downtrend and finally breaking out of this range-bound market we've been stuck in when looking at the euro dollar. So we'll watch that for the currency traders. Keep an eye on that one. Pound dollar, really, really choppy market. And really for me, this is on the daily chart, just too choppy to touch for the time being and waiting to see a break one way or the other, probably these areas, If we see it, I'm a little bit more interested. But for now, kind of a tough one. And, anecdotally, I think that just, not even anecdotally, just based on the evidence that I see in the USD strength, we could see that breakout. And so that's like a tentative, it's like breakout watch, right? We're gonna watch for a breakout on the pound USD. Here's the dollar yen. This was one that I was looking to possibly trade last week. As it started to pull back, I drew up my levels and I was there ready to take the trade at the 38.2% retracement. Didn't quite get there, just barely missed it. And that seems to be a theme going on with me recently. I missed the NASDAQ by a hair. Well, not by a hair, but I missed the NASDAQ by just a little bit. I missed the dollar yen by a pretty close margin. A couple entries that would have been really, really nice, but just barely missed them. So, we stay patient. For me, with the dollar yen, it's either a break and retest opportunity or we go back and retest the bottom of this range, at which point I might actually look to take a long trade. If I do take a long trade, I'll show you what our Discord channel looks like. We share all of our trades inside of there. So anytime Frank, myself, or Ivan take a trade, we share all of the details and explanations within the Discord channel. So if you're not already in the Discord, this is something that is a paid product. You know, you get what you pay for with this sort of stuff. If you're just looking for spammy, signals rooms, you're going to get what you pay for. We offer a genuine service where we break things down in full detail and explanations. So if something like this would be helpful to you, then there will be a link down below in the description for you to sign up to get access to these trade alerts when they get sent so that you can see what we're trading, but more importantly, why we're trading them. And here's a quick look at the economic calendar for the week ahead. We have Jerome Powell speaking tonight, actually. He's doing a segment on 60 Minutes, which should be interesting to see if he says anything there. So not quite the usual, FOMC meeting level of interest, but certainly anytime the man speaks, it can be a volatile time during that. So ISM Services PMI comes out on Monday, which will be very interesting to see on that front. And while we're on the topic of PMIs, I figured I'd show you guys this new chart we've been working on the Edge Finder. If you do track PMIs, they're one of my favorite things to look at. Manufacturing PMIs and services PMI, we have both of them respectively in the Edge Finder. We'll be getting the latest data for services PMI, which will be very interesting. And this is a really good tell of the economic strength or weakness that we're in. Remember that a number above 50 is strong and a number below 50 is weakening, right? So expansionary versus contractionary. And so we've seen these, the services PMI be kind of a strong area in the United States. So we will continue to watch this close, and we'll get the data pulled in here automatically for those of you guys who do have the Edge Finder. Keep track of this new page. It's a really cool way to just look at all of the different data coming in. For currency traders, we also have the RBA rate statement. So could be an interesting event there with the Australian Central Bank if they are looking to rate hold or rate cut. I mean, they're expected to stay the same, but it's all about that outlook. When are they going to start to cut rates? That's where everybody is wondering about central banks at this time. We get some Bank of Canada's Governor Macklem speaking. We have employment change for New Zealand on Tuesday. So for currency traders, we have some stuff there in the Pacific. And then towards the end of the week, we have unemployment claims out of the U.S., employment change out of the Canadian government. So should be interesting to see what we get there. And this is officially it, the last call for the Edge Finder sale before it goes away and our prices do go up. Transparently, we've been working incredibly hard, as I've showed you guys, like the bank forecasts, the PMI data. Our team here is working every single day to build what we think is a next level tool for traders who want to incorporate fundamentals in their analysis. But transparently, there's a lot of overhead to building these tools, maintaining them, and working with all of the different people that we've sold copies to. So we are restructuring prices. This is your final call. This is your warning. If you've been thinking about getting a copy, click the link down below in the description. Pick up a copy with the code YTVIP, and that will get you a discount before that sale price goes away. Thank you guys very much for tuning in to today's video. I hope you have a great trading week ahead, and we'll see you on the next one.